Hey everyone. So, a movie Predator, what does it have in common with trading Bitcoin? A lot. No, but besides the obvious things like the hunter,
He's killing us one at a time.
Like a hunter.
yes, like the hunter, stalking its prey and eliminating them one by one, same way you're going to be approaching trading, you're going to be stalking the best opportunities and only take them when the low-hanging fruit is ripe to be picked. Not chasing trades, not FOMOing it in, not being emotional when you trade. You really have to be calm and, like a hunter, stalk its prey. Aside from the main point of a hunter stalking its prey, there is another subtle thing that is useful in the movie Predator. That is where the predator itself, it uses a mask which filters out certain spectrums of light. And how it's applicable in trading is simple. When you have a bullish bias, you only look for trades that are bullish. Even though the price might be going down, you're still thinking you're in a bull mode and you get in trouble. You get stepped out, you go against the trend. So what do you do about that? Well, you have to change your filters.
Moving back against the wall.
It's backing up. It's moving away from them.
You see some Garber, your boys have been made.
And how do you change your filters? Just like in the movie, you have to switch from bullish to bearish to neutral views of the market. How do you do that? Well, when the price is moving one way and you're only looking to buy it, for example, you're going to have to take a different approach and say, okay, if I were to sell this market, where would I be selling it? Where would I be placing the stops? And where my target would be? Because now you're getting into the head of other traders, the one who would be taking the other side of your order. How does it help? Well, if the situation is blatantly obvious on the other side, perhaps your bullish bias is incorrect, especially if the price is showing you otherwise. So, as a habit, in order for you to become a successful trader, you have to look at different biases in the market, what different participants of the market are thinking. And some of them are bullish, some of them are bearish, some of them are neutral. And all of them are executing trades. The prevailing trend in the majority of traders will push the price a certain way. You just have to figure out where and how. So let's dive in. I'll show you a few examples how I look at the market and see when the prices are being manipulated, what bullish bias is telling us, what bearish bias is telling us, and how to find the proper one to get into the trades. A quick plug. For those people who are still learning how to trade or are not where they want to be, we offer a slew of services, one of them which are our signals. We offer crypto signals, forex gold, S&P 500 indices signals, and also fully automated auto copying right into your account signals for FX. So this week alone, we made over almost 2,000 pips with 22. We took 23 trades, 22 profitable, one loser. With that loser was only minus 1 pip. Obviously, this was a stellar week. Not all weeks are like that, but usually we are on point for months on end. Our track record is available here as well. You can check it out. All right, back to the video. So how does a professional trader look at the markets in regards to the biases? This is a 4-hour Bitcoin. I'll give you an example of what happened last Thursday. Let's say you think that this has bottomed and you're going to be buying this. That means you're going to have a bullish bias. So the first thing you should do after you start, before you enter trades, let's say we were somewhere here and you see that the market is starting to bounce again and you want to go long. What is the next step you should do is figure out, what about shorts? You have to switch your lens and see what this market looks like from the perspective of a short seller. So how can they do damage to you? So if you had that thought in your mind, after seeing this range develop, right, all the stops from all the bulls, most bulls, for short-term traders, margin traders, their stops are sitting right below here. This is a liquidity, it's called a liquidity pool, meaning all the orders are pulled together below these lows here. And all you had to do as a market maker, as a big boy, as a whale, as a professional institutional trader, you put on the other hat on and you figure out, okay, so a lot of people are trying to buy this dip. They're buying, 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 buying. Now, where are all their stops? And the answer, this is how you switch your buys. You start looking from the perspective of the opposite side. And in this case, these stop losses were below here. So all you had to do is push the price below these lows in order to tap the liquidity, meaning trigger the orders, which were stop losses, and basically stop out all the newly leveraged, all the newly established leveraged longs. And then you can just close your position in profit, and the price reversed. And that's exactly what happened. And that's exactly what I did in the on Thursday during the webinar for our members. I think I even posted it on YouTube afterwards. That this is a fake out. Why was it a fake out? This is an hourly chart, and I basically said that this is a fake out because most markets at that point, meaning NASDAQ, gold, whatever you look at, all the risk assets, they were actually catching a bid, meaning they were going up. And the Bitcoin was the only one decoupling from the trend and going down. So I figured, since there was no news, this was pure manipulation of the price in order for people who had bullish biases to get stepped out. And that's the games you play as a trader. You have to understand the both sides and what they're looking at and how they're looking at the pictures. When you are putting together a trade, you have to analyze it from a perspective of a bull and then from a perspective of a bear and see which side makes more sense. And in this case, the bullish bias was fine. However, you should have known as a trader that if everything else is rosy and there's no news for Bitcoin, there is no point for Bitcoin to be going down at that point. And most professional traders don't leave hard stops, meaning at certain levels. A lot of us, for intraday trading, they wait for candles to close. So this candle, as you can see, the hourly candle, if you only waited at the same hour, you wouldn't have closed this position. The problem is with a lot of novice traders, they don't have the discipline. If this candle closed on the lows here, professional traders would have closed their trades. The problem with a lot of novice traders, they don't want to close the trade, and that's why they have to use the hard stops in order, because otherwise the price will just keep on going and going and going, and they'll never close the trade until they get stopped out, liquidated, margin called, whatever, right? So if you have discipline to actually exit on the candle close, as I talk in most of my videos, whether it's for stop losses or entering new trades, you always have to wait for candles to close. Why? Well, for example, even here, when this candle was bearish and it was all the way down here, a lot of people who are bears now started to short sell. They started to sell here, 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 thinking that this candle right here would be going all the way down to retest the lows from earlier this month, from 25,000, right? And all these people now are sitting at a loss because the price is all the way here. Now, how would you analyze this trade from the both perspectives and putting different filters on? So if you were a bullish trader at first, you see that the bulls got stepped out here. Where is the maximum pain for the short sellers? Well, the maximum pain for the short sellers is right here. These levels right here. So now that the bulls got stepped out, where is the pain? Where is the next liquidity pool? So this is what a price does. It just moves from one liquidity pool to another. It just hunts it. And your job is to anticipate it, think how big boys think, use different filters, and think like a hunter, right? So you're hunting for the liquidity pool. Now the next liquidity pool is above these highs here. So people who went short prematurely without waiting for candle to close, they are now stuck underwater in all the way in this price range right here. And the price is out. So if you enter somewhere here, obviously you're now underwater. So let's figure out what they're thinking. They're thinking, okay, as long as the price doesn't take out these highs, I'm okay, and maybe we'll roll over. And maybe they might be right. However, the max pain would be to take out these lows, these highs here, to stop them out now with a similar situation where we're going to have a wick, just price blasting through it, taking stops, and then the next scenario develops and you have to do this analysis again. But you see how looking only from one filter does not benefit you completely as a trader. You have to literally switch between bullish and bearish biases and neutral biases. It's always cheaper to sit on the sidelines than to enter trades that are not high probability. So switch your filters. Think, get into the heads of other people who are on the opposing team, who have opposing views, and think like they think and see which side makes more sense to you. And also it will help you avoid common pitfalls like these stop runs. So for example, if you see now that the price is running and it doesn't close above, and you're short somewhere here, maybe it's not the time to close it yet. Let the price close above a certain level. Let the price show you that it's actually for real, and that's what's happening, instead of you rushing into conclusions prematurely due to your bias. I hope this little example helps you. As always, more than welcome to stop by our free Telegram group and check us out on ApexBull.com for more info. We're more than welcome. You're more than glad to chat with everybody. So stop by, say hi, and hope you enjoy the rest of your weekend. Take care.